Okay, everybody, it's Ryan Bundy, a mortgage loan officer, giving you some education on how to get pre-approved if you're self-employed. I've seen lots of people not be able to get loans if they're self-employed, and there's some solutions now. Let me go into some detail about why you wouldn't be able to get pre-approved if you're self-employed. First of all, the guidelines are harder because you don't have a pay stub that just says, hey, I make this per month. You're not salaried. So your income can fluctuate over time, year to year. Sometimes if you have tax returns that in 2021, you made way more than 2022 and there's a decrease, well, they can't show exactly what you're making in the year to date, even if it was back on track, because you don't have pay stubs to prove that. So they have to go off your tax returns in the past. So they're kind of looking at past income. Now, the biggest thing I see self-employed people is get bad advice from their CPA, or they're trying to get cute. Oh, I made 200 grand and then they write off 150 of it. The gross adjusted income would be like 50,000 in that case. So sometimes you're kind of shooting yourself in the foot if you're trying to not pay taxes. Now you're not going to be able to get a house, or we have to look at other options for you. So my advice on that was get with your CPA and decide if you're going to buy a house in the next year, 2 years, and then make sure you're claiming enough income so you get the best terms and the best loan, the lowest down payments. Those are more tax return Fannie Mae style loans, right? This is like the general conventional loan. So get with your CPA, strategize, come up with a plan. If you need to claim more income and pay taxes on that, that's okay, because you're going to be able to get the house. So backup plan. If you cannot get approved, you got declined, and you're like, well, I can't get a loan because I'm not claiming enough income and I have to wait 2 more years to file better tax returns. I mean, we've seen that a million times, and it's super frustrating because people can buy and they can afford it, but now they got to wait 1 to 2 years. So here's the backup plan. The backup plan is something called a bank statement loan. Okay, there's no tax returns, and you can go as little as 5 to 10% down. The terms get much better at 20% down. But the fact is that we do this all the time now, where people come to us, they make really good money, but they're not showing it on paper on their tax returns. We tell them, send us 24 months of your business tax returns. There are personal tax returns sometimes in some cases too. So depending on the program, 12 to 24 months of bank statements. We send it in, they do a calculation, usually anywhere from 70 to 90% of your business deposits. We can use that as income. We don't even look at your tax returns. The downside, little bit higher interest rate. Not too much, but just a little bit higher, maybe a point higher. But generally the people who are in this situation who can't get a loan, they've been declined, they're super happy. And as long as we can fit their payment budget and their down payment budget, then it totally makes sense. It's a total lifesaver. If you have any questions on this program, we'd love to explain it to you. Comment below. If you like this information, like us, subscribe, that'd be awesome. And look forward to more educational videos.